The following single-step income statement right here was prepared by the accountant of the Axle Corporation. As you can see, it has a revenues and gains section, an expenses and losses section, and then the net income section. Your job is to prepare a multi-step income statement from the single-step income statement. And for this problem, assume that the income tax rate is 25%. So as you can see, the multi-step income statement looks a little different than the single-step one and seems a little more complicated, but do not worry, as we will work through each section and line item together. Luckily, the first line item in both income statements is the same, and that line item is sales revenue. So if we look over to the single-step income statement, we can tell that the sales revenue account has a balance of $780,000, so we can transfer that over to the multi-step statement. If you're in Excel, just hit equals and then click the cell that has the account balance, and there you go. So next we can see that there is an empty line item that we must fill with an account, and then after that there's gross profit, and we must calculate gross profit because if you look at the single step income statement, you can see that gross profit isn't on there. Well, to get from sales revenue to gross profit, we must have cost of goods sold and subtract it from sales revenue. Therefore, COGS is the next line item. Looking at the single step income statement, we can see that the account balance for COGS was $420,000. So let's go ahead and transfer cost of goods sold over. Put cost of goods sold and then $420,000. From there, we have to find gross profit, which, as I said, you do by subtracting COGS from the sales revenue. In this case, that would be $780,000 minus $420,000, which comes out to a gross profit of $360,000. Okay, now we have to do the operating expense section, and operating expenses are basically the ongoing cost of running a business. So any of those expenses from the single step statement that fit that description, we will transfer over to the section of the multi-step income statement. Looking at the expenses and losses from the single step income statement, the only ones that count as operating expenses would be selling expense, administrative expense, and then the restructuring cost. So let's just transfer these one at a time. We can put selling expense as the first one. And then looking at the single step income statement, we can see that selling expense had a balance of $78,000. So just transfer that over. So equals $78,000. And then we can move over administrative expense. And that account has a balance of $98,000. And then finally, we can move over the restructuring cost, which, as we can see, had a balance of $74,000. Now that you have all the operating expenses, you'll want to add them all together to find the total operating expenses. Since I'm in Excel, I'm just going to use the sum function. So do equals sum, and then highlight all three expenses, and that comes out to $250,000 for the total operating expenses. Now we need to find operating income, which we do by subtracting total operating expenses from gross profit. For us, that would just be $360,000 minus $250,000, which comes out to $110,000 for operating income. Now we must do the other income and expenses section, and this is basically all the income and expenses that are not part of operating the business on a daily basis. When looking at the single step income statement, the first one that we notice that isn't part of operating expenses or operating income is interest revenue. And as we can see, this has an account balance of $51,000, so let's transfer that over. So get interest revenue, and then transfer the account balance over, which is $51,000. And then the next line item we see on the single step income statement is gain on sale of investment. This is also non-operating income, so we can transfer that over to this section. So gain on sale of investment, and then as we can see, it has account balance of $98,000, so transfer that part over, and there you go. Now for the non-operating expenses and losses. Now we need to do the non-operating expenses and losses. The first account that we see that we have not already touched upon is the interest expense. And as we can see, it has an account balance of $35,000, so let's transfer that account over. So interest expense, and then let's move the $35,000 over. However, since this is an expense, that means it is technically a deduction or negative, so before we put it in, do equals, minus sign, and then the $35,000 to show that it's negative. So just like we did earlier, finding the total operating expenses, we must now find the total other income. And it says net because we're subtracting the $35,000 and not adding it, but that's not really important. It's still the same concept. Do equals sum. Highlight all three other incomes and expenses, and enter, and that comes out to a total other income of $114,000. Now we need to find income before income taxes, and to do that we must add operating income to total other income. So for us that's just $110,000 plus $114,000, which gives us an income before income taxes of $224,000. Now we need to define income before income taxes, which is the second to last thing we need to do to finish the income statement. To find the income before income taxes, all you need to do is add the operating income to the total other income. And for us, that's just $110,000 plus $114,000, which comes out to $224,000 for the income before income taxes. Now we have one more line item before net income, and it's pretty obvious, but we can figure out what it is first looking at the single step income statement, and then at the line item right above this, which is income before income taxes, and we can tell that the last line item we have to put into the statement is the income tax expense. So let's transfer that account, income tax expense, and then from looking at the single step income statement, we can tell that this account has a balance of $56,000. So let's transfer that over. Also, if you want to check that this $56,000 is correct, we can just multiply $224,000 times the tax rate of 25%. So times 0.25, and that also comes out to $56,000. And now we are on to the last line item, which is net income. And this is pretty simple. All you have to do is subtract income tax expense from the income before income taxes to find the net income. For us, this is $224,000 minus $56,000, which comes out to a net income of $168,000. And there you go. Now you know how to prepare a multi-step income statement based on the information of a single-step income statement. If you ever need a refresher on this topic, feel free to rewatch this video. But other than that, thank you all for watching and have a wonderful day.